Now, the largest democratic exercise in history has concluded. Exit polls have declared their favorite candidate, and the result is almost certain. Prime Minister Narendra Modi is most likely to return to power. The voters seem to have validated the Prime Minister and his government. But what about the other major entity? We're talking about stock markets. The last few weeks have witnessed unprecedented volatility in Indian markets. And to give us more perspective on how markets are reacting to the exit polls, we have Rahul Karnakar, WION's business editor, in studio with us. Of course, lots to unpack here. We also will be joined by Mark Matthews, Managing Director at Bank Julius Baer, live from Singapore. Tushar Pradhan, the Chief Mentor Investment Strategy, Epsilon Money Group, live from Mumbai. Jayant Krishna, Senior Fellow, Center for Strategic and International Studies, live from Delhi. Thank you all for joining us. All right, let's get to it. Mark, I want to come to you first. Will more foreign investors bet on India now that the political outcome is more or less certain? I hope you can hear me, Mr. Matthews.
Yeah, I can hear you. Is that the question to me?
Right. Mr. Matthews, that's the question to you.
I apologize. I didn't hear your question. I better let the other person answer.
Would you like me to repeat?
If you don't mind.
Of course. Now, my question to you is, will more investors, foreign investors, bet on India now that the political outcome is more or less certain?
Yes, I think they will. Foreigners, their ownership of the Indian market is at a 10-year low. They are underweight the Indian market. They only own 16% of it. And I think that they didn't like it up until now because of valuations. India's expensive relative to other emerging markets. And I think they're increasingly realizing that there's a reason for that. And the reason is that Indian companies have positive returns. They make money that goes back to shareholders. And unfortunately, it's something that is not common in the emerging markets. So I guess it's simply because in other emerging markets where the growth prospects are much lower, owners of companies tend to focus on maximizing their own returns, and they're not thinking so much about the minority shareholders. But in India, where the opportunity is so big, owners figure, well, I'll just grow my company as much as I can, because as the company gets bigger, I'll make a lot of money too, and so that gets distributed to the minority shareholders as well. And so the New York Times carried an article on Friday that featured very prominently in the newspaper, saying that foreigners are now starting to look at India very seriously as an alternative to China. And I believe that, short answer to your question, we will see a follow-through with positive fund flows.
Right, Mark, just to follow up, you spoke about valuations. Now, markets have opened at a record high again. So what do you expect from here? And let's say post the count tomorrow?
Well, I don't know about the short term, but I can say with confidence that India is the only market in the world that that will outperform the U.S. in the next 5 years that I'm aware of. It's because of earnings growth. And I mentioned earlier, you've got strong economic growth that actually translates into profits. And for whatever reason, in other emerging markets, they have strong economic growth. It doesn't get down to the bottom line of listed companies as it does in India. So with that economic growth, let's say, I don't know, 6, 7, 8% per year over the next 5 years, I think it's reasonable to assume earnings growth of, let's say, 12, 13, 14% per year. And then if you look 5 years forward, this is not an expensive market at all. It's actually rather cheap.
All right. Well, Mr. Pradhan, coming to you next. How are markets expected to react if the NDA finishes with less than 400 seats?
Well, actually, the question now is reversed, right? There was a time when we were asking whether they will reach 400. And now we are saying that if they don't reach 400, what next? I think we are getting a little bit carried away here by the number per se. I think what we should really focus on is the fact that what does a majority help the government do? So conventional wisdom tells us that if we are talking about continuing reform, you will require a majority in parliament to be able to pass certain key reform initiatives. And if you have more seats in your favor, the likelihood of these reforms passing without significant challenge is very high. So I think one of the things which we are talking about right now is that the government, if it is coming with a very strong mandate, it provides an opportunity for everyone to understand that maybe there is a chance that the government can push through some very significant reform without much opposition through the parliamentary process. And I think that is the reason why this number of seats becomes very important. However, I must say that this 400 is a coalition number. There will always be differences over time. So as in markets, you need to be prepared for every uncertainty. I think it's a strong indication that such kind of economic reform can actually pass through now much faster if you've got 400. But I would not worry that if they come anywhere lesser than 400, that there is a reverse impact on the market to an extent that people will throw in the towel and the market will crash from here. So I won't think the reverse will happen. There will be mild reactions and there will be fluctuations all along the way.
Right, just following up on that, you spoke about 400, close to 400 is just a temporary blip, if at all. What reforms are you specifically talking about from markets perspective that you see the government throwing forward from here?
So there is a fairly significant agenda yet left for us to complete. One of the things which we recently saw from a markets perspective was an inclusion of the Indian bond markets in the international indexes. Now, the follow through from there is also something which is expected. And there will be some reform required to ensure that the global markets get very seamlessly integrated with our markets. There are certain sovereign issues which ensure that we may not be able to open up our markets to the extent which the global markets and the indices require us to be. But I think it's a welcome change that we have begun our process there. So that's one from a bond markets perspective. From an equity markets perspective, I don't think there is any significant change or reform that we are expecting from the indexes and the operation of the activity of the markets themselves. But I think there is always something there which will ensure that we will have people who expect certain sectors to do significantly better on the back of any change in the laws that we currently have. So I think it is a matter of debate in terms of what are the difficult reforms yet to be done. I think one of the significant areas of reform that we are all looking for from an industry perspective is labor reform. I think this is something which has come in and gone as an agenda for a long time. No significant progress seems to be on the anvil for this. But I think that might be one area that the industry, especially manufacturing, may be looking forward to ensure that India becomes a significantly fair place to hire, fire, and set up industry at a very short space. We are talking about land acquisition. We are talking about so many other issues which currently still need some significant reform to be able to have this business environment improve dramatically than what we were here. So just a few examples of what we can expect.
All right. On that note, Mr. Jayant Krishna, I want to come to you next. Which sectors do you think will benefit most from a 400 plus mandate?
See, one thing is for sure, markets have impatience, so I don't think they will wait for June 4 and, the actual outcome to come. But, since they're opening the first time after the exit poll results came, I would expect the markets would have a field day. They're poised for a big rally. The sectors which I look forward having a lot of promise in next few days would be, the banking, financial services, not necessarily insurance, engineering, capital goods, infrastructure, the automobile, because, as you would have seen in the recent months, I think there's a significant waiting list in the top end models of most manufacturers when it comes to four-wheelers, two-wheelers. Telecom is another big area where, some rally is expected. So I think the large caps of these sectors would surely can expect a big rally. And also some rally in some public sector shares. I think that's what I would see, because it's not just the good forecast for NDA and BJP coming back to power with at least 350 plus seats, but I think the recent GDP numbers, which talk about a 8.2% growth rate, I think these all augur well. And the continuity of, in terms from a policy making perspective, a regulatory certainty, I think these are all very, very nice things to happen. And we can surely expect a big rally. I would expect more to happen today than when the actual results pour in.
Well, just to follow up on that, quick question on what is the next event post tomorrow, do you think, Jayant?
So even from a stock market perspective, I would refrain from saying that. But, I would surely, from a government perspective, I would expect a lot of reforms to happen. Because if you look at the last two regimes of BJP, most of the reforms happened in the initial 2 years. If you look at 2014, when they came to power, GST happened in the first 2 years. Bankruptcy code happened in the first 2 years. Then it slows down. If you look at 2019, before the reforms could tick in, your COVID happened, the pandemic happened, So I think, and during pandemic, government did come up with some of the revolutionary reforms, especially the farmers bill, farm sector reforms, but those had to be repealed because of political reasons, So I would think that it is the best opportunity for government to start from the reform process right from day one. Some of the reforms are hinted in the first 100-day agenda of the government itself, which they had started, preparing for. So I would expect that, yes, land reforms, labor reforms, of course, some decodification did happen, but still on the ground, the labor reforms have not really favorably affected the business as they should have, because it is on the concurrent list. A lot of labor laws are applicable at the state government level, where not much change has happened. And of course, MSME reforms. So I think these reforms, to my mind, and a few others, if they start early in the process, it will be even better, not only from a stock market perspective, but also from, from a FDI perspective, more investments coming in and so on and so forth.
All right. So, of course, all eyes on the final election results tomorrow. And with that, Mr. Matthews, Mr. Pradhan and Mr. Krishna, thank you so much for joining us on World Business Watch with your insights on this. And of course, Rahul, thank you so much for joining us in studio with your insights on this as well. Of course, we'll have to wait and watch what happens tomorrow. For latest news, download the WION app and subscribe to our YouTube channel.